Hey there, folks. Welcome to the next installment of the Market Internal Review. We're going to go ahead and dive right in here on the newer format. So, if you hadn't watched some of the last videos, I'm trying to pull back here a little bit, not to reuse a trading term, but instead of doing them every day, certainly too much for me with other things I have going on personally. And even doing them every other day, it's kind of been a little tough to squeeze in with family and work. I'm going to try to just keep it to once a week and either publish them Sunday night or Monday night. So I didn't get one out last week, but we did have quite an eventful last week. So between the 5th through the 9th, we started off after a rip on February 2nd into kind of a squeeze type day on the 5th. So a couple of things that stood out to me was the previous TiWAP first standard deviation range. I'm going to keep hammering that this year with these videos because it's quite critical to the strategy. And using this indicator, if you're not using it, it'll really assist, especially in this low VIX environment, with filtering out the chop. So we've got low VIX. It's really tough to scalp options if you're an options scalper on days where we're squeezing really tight. So maybe not here. You might have been able to grab, say, the previous TiWAP rejection, breaking down prior day mid price. Here, this orange plot on my chart, and heading down short for the low, previous low. But then you see it was quickly reversed all the way back up to previous TiWAP multiple times and even broke above a couple times. So really wide range, and that is typical after we have a large, long, either up or down move. You notice the TiWAP bands, they continue to expand, especially when there is a high tick building up that TiWAP data set. So kind of expecting somewhat of a chop. Now, when the range is wider, you can have some longer moves, which we did see. But notice the whole day, we get the TiWAP bands somewhat coming down and then coming right back up. And we almost end right where we stopped. That's a telltale sign for the next day. And it's even more of a read whenever you see where we open up. So on the 5th, Tuesday, where it seemed like the last couple months, Tuesdays were kind of the day where we ripped, but we have this really tight TiWAP first standard deviation range projected over the new day from Monday's data. That's this purple range here, and we'll see the price is chopping within that really tightly. If you tried to trade inside of here, almost guaranteed you lost money. If you're just trying to trade naked directional options contracts or even shares, this will be really tough. At futures, you can make something out of this, especially when you get to understanding where the rejection points are, which in no shock to me is the the TiWAP band ranges here. But another kind of side effect of this is you're seeing all this tick being placed into SPY, building a really strong base. Sadly, they made the big move overnight in futures. We get into Wednesday, and we really just kind of ripped right out of the open. Continuation off of the futures move, which is where this gap is. And there wasn't a whole lot of room to grab any of this. But look at top holdings on SPX and NDX. Really just hot. I mean, almost six stocks full time in the morning session here for both the indexes we're holding. Or no, sorry, it is 10. I thought it was 6, but it's 10. So both NDX, the NASDAQ and the SPX, S&P, really just ripping all day. We get these high ticks. When we get a gap up like this over prior standard deviation range, almost guaranteed the next day will be another chop squeeze. And that's exactly what we got. So another tight squeeze day. Again, another day where if you didn't have this information, you're really going to suffer trying to scalp this directionally, especially with naked options. The theta decay will murder these contracts, no problem, leaving you quite frustrated. So we get this pattern here where we get wide ranges after a big move the next day that we can trade inside. You want to stick your bias to shorts under previous TWAP, longs over inside the range. If it's a really tight range, it's not even worth sticking to the above or below previous TWAP bias. It's best to wait for the breaks above or below. And then if we stick within that, then the next day you can look for a nice potential trend type move. And of course, we did get it, but in this case, the futures market had most of the fun. So then what do we get? Well, we had a nice rip, between pre-market, futures extended, and regular trading hours, just like this day. What do we get next day? We get another squeeze. Okay, so this is a good way to read the market with the TiWAP Ranges indicator. And it's a good way when you come in and you see this, it's a good way to just set some alerts above and below and walk away. Let the market figure out what it's going to do, and let the software watch the charts for you. You'll save yourself that decision fatigue. You'll save yourself the time in the seat. You can go live your life and just let the system tell you when things have changed. It's so amazing when you can convince yourself to do that. So then the next day, what do we get? Well, after a nice squeeze, now we get that trending move. Bingo. So we get that on Friday fun day. And I'm sure if I turned on my TWAP BNR detection, so perfect day here Friday, we get a break and retest on that first standard deviation. TWAP band, I got to turn on more extensions because I ran out. And a potential entry could have been here. Set TWAP as your stop. And now here's another tip. If you're using TiWAP ranges, you're using TiWAP, these ranges here, so this range is based on the standard deviation measurement from the day before. Really tight band here, very, very tiny, minuscule type standard deviation size. So if you've watched any of my other videos, you'll know I've mentioned that 2 standard deviations is typically the move you'll receive. The thing about that is that scales with previous TWAP range. So if it's a very small range, then 2 standard deviations is going to be too small. You'll probably see something more like 3 or 4. So this is one of those days where we're looking at this and we're saying, okay, this standard deviation size is really small. It's almost like ATRs, average true range. When the ATRs are really tiny, as soon as there's an actual burst out of one side or the other, you're going to see a huge move in comparison to what the average true range has been, say, for the last 50 candles, 200 candles, depending on what time frame you're on. Same thing here. So these SDs are really tight and squeezed together from what we've been seeing. And now that there's actually going to be a break, you're going to have to consider the fact that 2 SDs being only 62 cents is probably not the end of the move. You can try to double it, which would be about $1.25. That's a good move on SPY. So we get that BNR full alignment with New York market here. Looks like maybe that's not correct. This detection is really tough to code because of reading other internals symbols. I noticed that it's quite erratic sometimes with the trend. So the full alignment actually wasn't here. It looks like the full alignment break and retest was actually more over here, which I like this entry better because it's close to one of my favorite times. So let's see here. We break down, and I mean the initial break certainly was over here. We break in. We don't ever touch TWAP. You notice that? We're never touching TWAP. But the full trend alignment doesn't happen until 12:06, but we're not outside of TWAP. So you could either enter here or you could wait. But right about here is where I like it. That is a really clean candle setup there. So you get in here, and this is also real close to 12:30. That's one of my favorite times. That's where I see so many times there's alignment. Obviously, anything can happen in the markets, but this is a common pattern I see. So 1, 2, 3, 4, 5 standard deviations That's how much of a move you could have caught. And look at this beautiful price action here, staying basically on that upper band the entire time until we get a really big surge in price. So you can look at this too, and you can see from tick kind of where the end might be. So you've got a ton of confidence potentially in the signals here for the top index holdings. They're absolutely bullish on both indexes. That's fantastic. We don't have bullish volume, but we've got the trend for the volume is rising, so that's good. We've got a positive ratio for advancement versus decline and a bullish trend, so that's perfect. That's what we want to see for both of these, but we'll take what we can get. But here you notice we've got high tick, higher highs continuously as we're rising through the standard deviations. Then all of a sudden, we're making this high and we're making this high. But if you notice, we don't do that on tick. So this is what I have called in the past, I'm pretty sure on the videos, certainly in chats, a tick divergence. So when you see this, this is probably a good sign to go ahead and manage your trade. Obviously, you do however you want, but I manage my trades when I see these. You get that, and then look at what happens. We get a massive bear tick breakdown here, and we break solidly into the TiWAP band. We do stop and go back up, but I don't know what size down move this is. Let's look here. It's probably at least $1. Okay, it's real close, 80 cents. So that would hurt, if you run all this way to give that up. I mean, you're still handsomely green. At that point, you're well above your entry, but still, giving 80 cents back is no fun if you've got a handful of contracts or whatever it is you're using. So that's how we ended Friday, a phenomenal rip type day, which takes us into today. So we have this big rip. I'm expecting a tight day today into that TiWAP range. And I will say one thing that makes that real different is over the weekend, because there's news, there could be other things, there's other countries' markets firing up, regional markets. I have noticed over the weekends, the rip prior day into tight range next day rule doesn't always happen. So weekends are a little bit of a special thing. So heading into today, we get quite the crazy day here. I'm watching a very tight range. The initial half hour segment here was, I think on SPY it was like a 60-cent range. It was nothing. It might have been tighter than that. But the one thing that was really just truly incredible was the add and the volt. The volume was insane. Just a train piling through everything. Almost no pullbacks ever. I barely saw any down candles on this whole move. Nothing but straight up accumulation the whole time. Same thing for add. For the most part, it got up and running in a hurry. Made no stops pretty much the whole way. It did, let's see, this is around 9:56. It did settle around 1500 for a while, but it showed no real signs of backing off. I'm watching accumulation down here. The one other thing, though, that was kind of bizarre was watching the VIX. So the VIX was curling up, and also VIX, VIX 1D. I've been watching this a lot more. This is just tracking the one-day VIX. Yeah, look, it's just a roller coaster right on up. Not something you necessarily would want to see SPY and VIX going up together. That's quite bizarre. But that's what happened. Notice we base right below prior day high, and we're basing right on this very tiny weekly gap. It's 3 cents, barely worth mentioning. And also previous TiWAP first standard deviation range, that high level right there, 501.12. Next thing you know, we start getting a surge of more bull tick, and away we go. And we get, oh gosh, I think from this break and retest of TWAP band, I think that's almost 3 SDs, just short. And then we get one actual detected from my indicator here. We get one detected BNR, and that one gets you not quite 1 SD. Before we get this insane reversal, now I looked around today. We had some news. We had one Fed speaker. The thing that maybe moved the market was the monthly budget statement, but I honestly don't know exactly what caused this move. What I can say though is I do believe it was pushed by Qs. So looking at the Qs busted right on up to the second deviation high on monthly TWAP. It's broken the previous day high. Everything's looking great. And then we get this massive rejection of like everything all of a sudden, blowing through the daily gap, which is also the weekly gap on Mondays. Retested it, ripped right through previous day mid, stopped at a monthly TWAP level, and that's about how we ended our day. But we ended it in decline. We finished lower than where we opened. Now, looking at the Dow finished in advancement. We were really ripping, cooking hot. We finished over prior day high. So that's all well and good. Dow's looking great. The Russell also has done something that it's failed to do for quite some time, and that's break out over 200. So it did that, broke over the third deviation high on monthly TWAP, and really struggled with this monthly TWAP level 203.15. But you can look at the accumulation, and we're kind of back at that point where New York market and the Russell seem to be locking in together. Not sure how long that'll last, but I saw that a lot in 23, and those were kind of both my little indicators of market breadth. We had another day where last week where market breadth was full bearish, but yet SPY and Q were going up. And it was very difficult if you're a market internals trader to figure out, well, what the heck, which direction's the market going in? Other than TiWAP ranges, the TiWAP session bands, and top holdings, some other things, I kind of had to ignore the breadth because of Russell. Russell was really not feeling it. One of these days last week, I can't remember which one it was now, but it was a pretty rough time for the Russell. But yeah, I think tech for the most part was the main cause of this. You can tell by the fact that they made a high and then a lower high here. And if you look at SPY made the same high. So that's one indication for me. And also just reviewing at the end of the day, we did finish lower than where we started, but just barely. I mean, when I look at these two, we didn't even break prior day mid. Sure, we broke back below TWAP and prior day high, but it just looks much stronger to me than the Qs. So I'm blaming the Qs for that dump. But why? I don't know. Looking at all the top holdings, Microsoft, Apple, Meta, Nvidia, all those names, none of them were feeling this pump today. So big pump fake to start out the week. Now we have more Fed speakers this week. We also have CPI tomorrow, so the 13th, early pre-market session. And I believe we've got a couple of other things. Yeah, core PPI on Wednesday, PPI month over month, Fed speaker. So pretty hot and heavy. Fed Bostic. I will say Bostic, he's after hours. He can definitely move some things. I've noticed some of the times he's on. He's quite impactful. Not seeing retail sales. That could be kind of big given the debt and everything that's kind of climbing again, credit card debt and everything. That's somewhat of an indicator for the economy and how it's doing. Looking at earnings, not seeing much. I think we've got Nvidia earnings pretty soon. I don't know where Nvidia is on here. I don't really like trading views earnings thing. It drives me nuts. But yeah, so definitely this week will be packed. Going over to market breadth. So I don't know that if I've covered this on a video, but I put this together. Market average trend is the name of the indicator, and you can configure this for different markets. So S&P 100, S&P 500, all the different sectors, energy, utilities, materials, health. You can focus in on the NAS 100, NAS Comp, Dow Industrial, Dow Comp, Russells, you name it, right? You can even track growth on here from S&P. Fantastic. And this is using the market breadth symbols that I have demonstrated in the past. So it's nothing that I'm curating myself necessarily. I've just put it in a very nice package. So I think, anyways. And then it figures out all the different tickers depending on what you pick here, and it will load them all into one display. So if you want to look at the top 100 holdings of S&P and how they are doing relative to the 5-day, 50, and 200 SMAs, you can click these and then you're done, right? It'll figure out all the rest of it for you and plot that out. I've got this set up now. It's a little it's a little hairy now. I'm running out of room. I need the world's biggest screen, but looking at this, I've got NAS 100 down here, SPY 100, obviously you already saw, the Dow Industrial and the Russell 1000. And then obviously I've got the RSI spider sector indicator that I've had for 20 plus videos now. You got it all here, and you can kind of look at this in comparison to SPY's chart, which is the 500. And you get a really nice bird's eye view of what might be going on from a breadth perspective across all the indices compared to the S&P 500, as well as individual spiders. This is really an info-packed screen here. The information that you kind of want to review is for each one of these indices, where are we at on the percentage scale here? So the way you read this is that 74% of the top S&P 100, so that's what, 74 stocks roughly, are over the 200 period simple moving average on the daily chart. So that's what we're looking at here. And 66%, I'm squinting because it's very tiny, 66% are over the 50 SMA, so a little over half the stocks in the top 100. And almost the exact same amount over the 5 SMA. So if you've never seen the 5 SMA, I don't know that I've ever even really shown it on here. Let me configure it. So the 5 SMA is real tight. Really tight with the price. It's just the last 5 closing prices. By default, it tracks, SMA tracks closes. 5 closing prices averaged together. That's it. And it trails it in. Well, divided by 5. But so this close plus this one divided by 5, and that gets you this value for that day, and it's rolling forward. So you can see just how tight that is with the price. So hopefully that shows the impactfulness of the measure that 64% of the S&P 100 are over the 5 SMA, basically the tightest SMA you'd want to use realistically on a chart. If you get any tighter, you're not even going to be able to see the dang thing. It's not going to be very informative. But if the candles are tracking with and leading the 5 SMA, that's incredibly bullish. If you think about what has been happening on a 5-day rolling basis. So same thing here for the NAS. It's slightly weaker in some ways and stronger in other ways. So it's kind of interesting. The 200 breadth indicator, we're at 76% versus 74 on S&P. 50, we're at 67 for the 50 SMA on NAS versus the 66 on the 50 SMA for the S&P. But the 5, we're only at 62 on NAS 100 versus 64% on the 5 SMA for the S&P. So a little bit of punches being thrown by both indexes. I think a large part of this is because these things are in a lot of ways, these things are the dang same index. The top holdings are almost the same companies. It's kind of silly, really, but looking at this indicator, which is the index top holdings advance versus decline, you can look here, the top holdings: Apple, Microsoft, Amazon, Nvidia, blah, blah, blah. You come down to NDX: Apple, Microsoft, Amazon, Nvidia. Now it does mix it up a little bit. They both have Meta, they both have Google and Goog. I hate that ticker name. Tesla, and they have a little bit of divergence. We got Adobe and Broadcom, AVGO, versus Berkshire B and United Health, UNH. So for the most part, though, from a tech perspective, they're almost the same dang index. So Dow Industrial and Russell, I haven't been bringing them up, but look at these guys, man. The 200, we got 80% of the Dow Industrial. Now, admittedly, I don't know how many stocks are in there. It's probably more than 100. Dow's a pretty big index. It's one of the older ones. Russell, a little weaker, 71. So like I said, Russell's been really struggling to break out over 200, and I think that's kind of what we're seeing here. So definitely encourage you, if you're somebody that likes to zoom out every now and then and just see where the heck are we, how strong is this market, regardless of macroeconomics, the market average trend. This I would encourage you to go check it out. And the 5 SMA, that's where I've got these price or date lines here, because that's every time the 5 SMA breadth indicator hit almost like a low oversold, if you will, kind of like RSI. And then that was a really great potential buy for either a scalp or a trend continuation pickup. Obviously, nothing's perfect. It's never going to work 100% of the time, but it's certainly something to take a look at. You could use this as well to go look at stocks that you know might be oversold by other indications, and then you're kind of half thinking you might want to try picking some shares up or something else, invest. You can use this to see, okay, well, the rest of the market is kind of pushing down here, so everything is potentially at lows before we start running back up to meet the 250 SMA and other trends. So it could help confirm or deny some things for you. Looking at the RSIs here across the spiders, we can see healthcare has been running, and obviously SPY's own RSI is running. The industrials, finance has been pretty hot. I've seen a lot of volume continually dump into finance. Today we got 40 mil volume. SPY almost received the same at 56. The rest of the spiders are pretty light overall. So as far as where I think we are going next, that one's tough. We've got some things coming out. Like I said, the CPI, PPI, I think we'll wait and see what's going on there. But I will say I'm just slightly worried for tech, given this hard rejection. So you see a lot of these upward moves, not very strong. They're real choppy kind of moves here. But this down move, look at how very little bull candles there were. Pretty much just straight down, save for this little retest, and then more straight down. Even the rise up is not as confident as the plummet down here, the swan dive. And we do have to consider the fact that we're at all-time highs, and we just continually making more all-time highs. At some point, somebody will be taking some profits, but I'm just not the one that's going to continually call tops on an uptrend. So I'll wait for some confirmation. For me, if I see the monthly TiWAPs start to break down and hold below, then I will consider that we're going to start seeing some more downside. So you notice we're still above the first deviation on monthly TiWAP, and we're not quite halfway through February, which is insane to think about. This year feels already like it's flying by, but that's kind of where I will run with for a bias, for a high time frame bias. I'd also want to start seeing some previous range breakdowns. So notice, for the most part, the prior day lows since February has started have been higher. So here's the first Feb low, then a higher low, higher low, higher low, barely, but a higher low, etc., etc. Even today. So tomorrow when we open up, guess where that low is going to be? It's going to be right here, higher than this one from last Friday. So that's still an uptrend. So even though we've got this little sell-off here, look at where we're at. We're still running, right? So that's where my bias will potentially start to shift, is if I see 429 breakdown, which seems kind of nutty, but that's what I'd be looking for. And then we got a big thing here. We got this February monthly gap. That's way back down at 418 and below. So we want to start seeing some of that. And I don't know. We've got Dow and Russ starting to rip. They might give us the strength we need to continue higher now. And we just have a very reluctant tech. I don't know. So SPY, almost exactly the same scenario. Continual higher lows, and until I see something different than that, and until I see monthly TiWAP breaking down, I'm not going to consider that there's a sell-off. Now, I'm not the kind of trader to call top and short from the very high and get it perfect and catch the whole move. That's not who I am. I am certainly more of a trend trader, and I like looking for things that confirm an idea. I will sacrifice part of the whole move to grab something that I consider to be a little bit of a safer trade. Whether it works out all the time or not is something else to discuss at a different time. But Dow, yeah, same thing. Same thing. All these are the same. And New York, we saw, thanks to what I'm sure was Dow and Russ, we saw a big breakout. Huge move today. This is over 2,800 stocks ripping. That's what this is. And definitely secured the bag. Kept it, far above prior highs by over 100 points. And continually dragging that monthly TWAP up there. So obviously, this could be the top here, and then we could just plummet to zero. But and I just don't think this is the start of something. But obviously, there's always a start from somewhere, and you could always go back in time and point at a high price and say, there it was. That was the signal. So, all right. Yep. I'm just going to go ahead and stop it here, folks. I try to give you a little bit more of insight of how I use the TiWAP ranges. Use that as your chop filter. I heavily encourage it. We had a really hot New York market. Even to end the day, we had almost a 5-to-1 volume ratio. Not quite 1,500 add. VIX is still really low, considering. Even though it went up today with SPY, it's still less than 14. So puts versus calls is a 0.68. Yeah. So hopefully you've been having a great time trading. Hopefully you've been dodging the chop and taking the rips and buying the dips. Yes, that's what this market's been giving us. And in the meantime, I will be on Twitter, and some of you have reached out on Discord. I'm sure you can find me, send me a DM on Twitter if you want my Discord handle. Still don't have a official Trade Seekers Discord public one, and I've had many requests to make one, so I think I'm almost at enough people that have requested that I might make one here soon. But anyways, have a fantastic week. Probably not going to hear from me for market internal review video until either Sunday or next Monday. So as always, thanks for watching. Happy trading.